Good morning everyone and welcome to Morning Markets from True Potential. Today we'll be focusing in on the UK employment and wage data released this morning. The strength of employment and wages have been some of those key factors that have been influencing how the Bank of England have been thinking about interest rates and interest rate trajectory, but also how it's been influencing really the slower rate of decline in inflation in the UK relative to that which we've seen in the US and also in Europe. So if we look at some of the key points coming out of the data released today, which covers the period of March to May, a couple of points really to highlight. If we look at regular pay, that's pay which excludes bonuses, that increased at a rate of 7.3% over the period. That's ahead of where the market had expected it to be. We also saw the fact that total pay, that includes bonuses, was also increasing at a rate ahead of expectations. It's also important, however, just to note that given the inflation backdrop, real wage growth does remain negative. Looking at employment then, we saw the unemployment rate marginally increase to 4% in the period. Within that, we did see the participation rate, those that are involved in wanting to work, increase ever so slightly, back up to 76%, and that was largely driven by an increase in part-time employees. Also, job vacancies, and we've talked about this in the past, the high level of job vacancies, they still remain above 1 million vacancies in the UK. That's down and it has continued to trend lower over recent months, but still 1 million jobs that are open and require work. If we look then, does that data give us any sense of change? Does it change how the bank might be thinking about interest rates? I think probably not. The data continues to point to that underlying strength in the labour market in particular, and will continue to challenge the Bank of England in their task of tackling inflation. It also really links closely to comments at the Mansion House speech last night by the Chancellor and also the Governor of the Bank of England in terms of the implications that rising wage pressures have, but wage demand also have. And really what they're alluding to there is just the key concern being that wage pressure feeds into higher costs for businesses. That then feeds into those businesses having to increase their prices to their customers. And we have a bit of a spiral in terms of wage prices driving the prices of products. That in and of itself is really what they're focused in on. Andrew Bailey did also discuss the unexpected strength in the economy, and that's a good thing to have that underlying demand strength coming through, better employment and better wages supporting that. Certainly also very evident from the British Retail Consortium data this morning, which shows growth in June of around 4.9% in terms of the value of retail sales, and that's above the 4% average that we've seen over the recent period as well. I'll leave it there, but please do join us again tomorrow. Many thanks.